Okay, hi everyone. Welcome to Profits and Pints. How's everyone doing today?
Good.
Woo! How's everyone doing today? Okay, cool. Great. Well, I'm excited to have you guys here. I know it's really nice outside, but it's hot. At least I feel that way. So I'm happy to be inside. I don't know about you guys. So I'm really excited about today because I love talking about cash and financials, and I know you guys love it too. Probably George does, but I don't know if anyone else feels this way. So I've been talking a lot about leadership, a lot of different topics, but I haven't done cash for a long time. So those of you that maybe have not been here before, my name is Samantha Doyle. This is Profits and Pints, and I'm the owner of Strategic Business Coaching. And I really want to make sure that when it comes to business ownership, financials is something that a lot of business owners shy away from. It's something that a lot of business owners don't like. They don't like to look at their financials, or they don't understand it. They don't know how to read their profit and loss. And as a business owner, you really should at least have the basic fundamentals of understanding how to read your financials. And in my opinion, which is fact, obviously, you should also know what story it's telling you, right? What story what is happening in your business, and how does your financials tell that story? Okay, so we're going to talk a little bit today about how to get your financials to tell you that story, and try and make it simple, right? We're not trying to make these long, drawn-out, complicated financials that you don't know how to read and you don't know how to understand. We want simple financials that tell you a story to help you make informed decisions, okay? And that's what it's all about. So we're going to talk about how to find margin, that is where your margin is hiding, okay? So a little bit of this is overview. I did a how to read your financials one, I think it was last July, I want to say, which is almost a year ago. So for any of you that attended that, there was a little bit of overlap from that, but I go deeper today. So as an overview, just so that some people, may know how to do this stuff, may not. So doesn't matter where you're at. Okay, we're gonna kind of start from the basics. There's revenue in a business, right? Does everyone know what revenue is? Okay, great, good. Hopefully you have it. And so revenue is income that comes into your business. It's the service or the product that people are paying you, right? They pay the invoice. That's the revenue that comes in. Cost of goods is the expense that comes out of your business that is directly tied to the production of that revenue. Okay? That is different than overhead costs. And so when you take the direct cost, so for example, and we'll go into this a little bit more detail, but if you take the cost of goods, so for example, if you're selling a product, it's the cost to purchase that product or to make that product. If you're selling a service, it's like labor, like the cost to pay the person who's doing the labor to do that service, okay? Any direct costs. Think of it as if you have one sale in a year or 100 sales in a year, this cost will go 100x, okay? The difference of that is your gross profit. It's not your net profit, it's your gross profit. And your gross profit is the number one most important number you should be paying attention in your business. And a lot of people don't track this, and a lot of people don't track it accurately, okay? So if you take nothing else away from this, it is make sure that you are tracking your cost of goods and your expenses accurately in your business so that you know what your gross profit percentage is. This is really important. It really shows the health of your business. How healthy is it running? How much money do you have left after you spend the money to service the income or to buy the products, to sell the products, okay? Really, really important. And I cannot tell you how many times I work with businesses, it does not matter what size businesses, that I look at their financials and they're not doing this, okay? And so if you can just do this one thing, you will have a leg up on most businesses. So most business owners think that they have a profit problem. I hear this all the time. I got a profitability problem. What does that mean? What does it mean when you say I have a profit problem? Does anyone know? Yeah.
They're working for free.
They're working for free. Okay, that's a great answer. Anyone else? What does it mean when someone says, I have a profit problem?
Paying too much in taxes?
Paying too much in taxes, maybe? Yeah. Well, the answer is, it doesn't mean anything. Because a profit problem isn't a problem. The profit problem is that there's another problem that is making it so there's not profit, right? The profit isn't the problem. It's the lack of profit that is the problem. And so the real problem is that they don't have visibility on their financials to know what the problem actually is. Okay? So we talked about this a little bit, but again, I'm going to go just a little bit deeper. So some examples of cost of goods versus overhead. So again, we have revenue, making money. Then you take away your cost of goods. That gives you your gross profit. Then whatever is left, you then take away your overhead, and that gives you your net profit. This is the very simple formula of what is on your profit and loss statement or your income statement, okay? Oh, some people look at it and they have like a million lines on there. This is all that matters. Oh, I pushed a button. Sorry, guys. I didn't know that button existed. Okay, so cost of goods, some examples of cost of goods are things like direct labor, right? Especially if you're in a service business. Materials, subcontractors, job costs. Anything related to the cost of doing the service. Things that fall into overhead are things like rent, right? If you rent a space, if you have one job or 100 jobs, it doesn't matter. Rent's not going to change. Okay, your landlord's not going to be like, oh, you only had one job? I'm going to discount your rent, right? That's not how it works. Office staff, right? So now office staff can be a little bit weird because you can think, yeah.
Oh, sorry, I didn't mean to interrupt.
No, you're okay.
But with the direct labor in a service-based business,
Yes.
can you speak to that a little bit more
Mhm.
for service-based businesses
Yes.
and like my time spent on this project?
Yes. So when you are a business owner, I'll talk about this specifically. And let's say you're a solopreneur, okay? Sometimes it can be really hard to understand what is the time or what is the cost of doing the work, right? And what I would recommend, and this can be hard, is that if you track the time that you're spending to do the service, okay? So I'm going to use you as an example because I know your business, okay? So Kelly does social media, okay? So Kelly, I would imagine that you do some strategy, okay? And you're spending time creating the strategy. I imagine you're doing some shooting of the videos. You're spending time doing shooting of the videos. And then I imagine you're spending time putting the videos together and making it look amazing, right? So there's time doing that. That's just labor. But I'm also imagining that you're spending time sending invoices and categorizing expenses in your QuickBooks or whatever. There's other things that you're doing that is not directly associated with a client. Is that right?
Yeah.
So if you can find a way of it tracking how much time you're spending on a specific client, or at least, even if it's not a specific client, but at least on those services. And you can accumulate saying, hey, this month or this week, I spent 20 hours on client-related services versus whatever amount of hours on admin services. Then that is going to be really helpful for you to understand, are you charging enough? Are you quoting enough? Right? What is your cost? And I hear this all the time with especially small business or solopreneurs. It's like, well, I'm the business owner, so I don't charge. No, that is the wrong answer. You are wanting to build a business to sustain your life. You're not trying to build a business to run your life, right? And so you need to make sure that you're charging enough. Okay, and I would also add that there's probably other things involved in those costs, like software that you only that gets charged per instance for a client, or different things that you that are only used in your services, and those things would also be cost of goods. Does that answer your question?
Yes, I think the one follow-up question I have is, do I assign a specific like hourly rate for myself versus my hourly rate?
Yes, 100% yes. Think of what would you pay someone else to do it. Yeah, and then hopefully pay yourself that. That's the goal, or more. That's fine too. If you can get to the point of that, that'd be great. But the goal, especially when you're starting out a new business, right, is sometimes you can't pay yourself that right away. You're in building mode, and I totally understand that. But I would at least track it, right? At least track it, because you want to build a scalable model. And if you're not building a scalable model, you're never going to have a scalable model, right? And so at least track it so that you know eventually you will get there. Yeah.
Okay, so you did mention software, but okay, so I buy my computer to do my job, and now I have it, so I don't have to pay for it every single time I go out on a job and do stuff for people. So where does that fit?
So I would say there's two ways I would categorize this, and this might be more of a George question, honestly. But you would either expense it or you could put it as an asset and depreciate it over time. It kind of depends on the size of the computer. Either way, it would not be a cost of goods. It would not be a cost of goods.
Okay, so
Yeah.
it doesn't fit neither.
Because think about it. If you bought a computer and you had one client, if you bought a computer and we had 1,000 clients, it's still going to be the same cost.
Exactly, and that was what
Yeah.
it was.
The one example that I've been using a lot that everyone's like, oh yeah, is gas. If you're driving around to clients, if you're a service person and you drive around to clients, gas is a cost of goods, right? Because you're driving around to service those clients. If you're someone that does that, right? Any other questions on this? Does that make sense? Cool. Okay. So now we're going to go a little deeper. Okay? So here's a real example. I'm using a construction client, and this is actually one of my real clients with fake numbers and no names. But we're going to use a real example here. Okay? So revenue for this client is at $500,000 for the year. They have cost of goods at $425,000, and their gross profit is $75,000. Okay, so their gross profit is 15%. Is that good or bad? I don't care what industry you're in, it's bad. Okay. Here's the other thing to note is that gross profit percentages and net profit percentages, you can look at industry averages. Okay, there's industry averages, something you can Google. My rule of thumb is you want to be much better than industry average. Okay, industry average includes businesses that are failing, and that's a nice way of putting it, but it does. It includes businesses that are not making it, right? And so you want to be better than the industry average. Don't shoot to be industry average, okay? The organization, I'm a certified scaling up coach, and their goal is 3 times industry average for net profit, okay? Now that can be a stretch. Just at least try and be better than industry average, okay? Okay, so 15%.
Hey, Sam.
Yeah.
In my industry, they have a nomenclature for best in class.
Uh-huh.
It gives you an idea of what the best operating
Yeah.
businesses do. So that's a good Google search, is to search what is best in class in my industry for net
Versus average.
versus average.
Yeah, that's a great one right there. Yeah, there's a lot of data out there that you can get. Okay, so what decisions, if this is your business and you're like, okay, I got a profit problem, I got a gross profit problem, what decisions do you need to make? What needs to be adjusted? Anyone tell me? What?
Decrease your COGS.
Decrease your COGS? Okay, how? What?
Look at what's on
Better suppliers.
Better suppliers, maybe? Yeah. What else?
Increase your price.
Increase price, reduce overhead,
The things that aren't COGS, like you might be inefficient at.
maybe inefficiencies.
Yeah.
Yeah. How would you know? How do you know which one you need to do?
You'd have to look at it and track it closely.
Roll the dice.
You should probably dig a little deeper, huh? What do you think? Okay, so that's what we're gonna do. Okay, this may be a little overwhelming. I'm gonna explain it, okay? Again, we're using a construction company. So what I have done is I've said in this construction company, we have 4 different income streams, okay? 4 different categories of income, okay? We have construction labor, okay? This is them doing the labor, right? Of the guys or girls out in the field doing the labor. We have construction materials, right? So they're selling the materials, the wood, the nails, all that stuff. We have equipment rental. So this company specifically, whenever they have to rent big equipment, they pass that fee on to their clients. And then we have subcontractor income, right? So when a subcontractor gets hired to do drywall or whatever it is, they pass that on as well, all right? At the exact same time, we need to track the exact same categories and cost of goods, okay? This does not work if you don't track the exact same categories. So we have construction labor costs, we have construction materials costs, we have equipment rental costs, and we have subcontracted costs. Now what can we say about this company?
They're not charging enough for equipment rental.
Not charging enough for equipment rental? Maybe. Yeah?
They're not charging enough for materials.
Not charging enough for materials? What do you think? Well, so I did just, I put percentages here. So this is the margin right here for each category.
They're charging too much on all of
Yeah,
them.
but
Your construction labor is off because it's half your revenue.
Construction labor is off because it's half our revenue. Say more.
They're undercharging for the construction labor. They're bidding low to get the job, and then they're eating the cost with low margins.
10% margin on labor. Right? It's pretty low. Now, again, you can look at industry averages here on different things, right? And what's average margin on different things. I would say for materials, 25% is probably decent, I would say, actually, for construction. Now, again, you may not be in construction industry. That's okay. I don't expect you to know that. Equipment rental, it's not really something that you put a lot of margin on. I would say you might be able to get 10, 15% on it, maybe, right? But you kind of have to know this stuff, right? Subcontracted income, same thing. I'd say 20% is actually not bad. You might have a little wiggle room, but maybe not much. But that construction labor, you got a lot of room on there, okay? I'm gonna go one step further. This is something that I do with all of my clients, okay? Is I say, when you have a cost, what income is covering it, okay? And let me explain this. Every single cost is covered by an income category, okay? So I'm gonna go deeper into this construction labor because when we look at materials, all the materials cost, that's pretty self-explanatory. It's all the materials, right? Equipment is equipment, subcontractor is a subcontractor. But there are other costs associated with this company that are not listed here. Okay, so we're gonna dig just a little deeper. And we're gonna look at construction labor costs. Now, we don't put a line item for fuel on the invoices because people would freak out, okay? So we don't do that. But we have to account for it because the more clients we have, the more fuel we're going to eat up. And fuel costs are crazy right now, right? So we put fuel under construction labor costs. Why? Because we want to track our margin in this category, and we want fuel to be part of that margin. We want to understand what our margin is with fuel in this category. Because this is the category where we are tracking fuel. Because we're not putting a line item on the invoice for fuel. So it's got to be covered somewhere, right? So we have direct wages, right? That's self-explanatory. We have taxes, right? And then we have fuel. But the other thing we're tracking is warranty, right? We warranty certain items or certain labor, right? So we have to go back. We're tracking that. We're also tracking go-backs. These are mistakes. So now what's happening? We've spent in the last year $123,000 on go-back or warranty. So is it a pricing problem?
it's involved. It's shoddy workmanship.
Now, if we only had income and cost of goods, would we ever have found this out? We never would have even realized this was happening, right? And so by having just a couple things outlined, and the thing here, guys, is that you think, okay, well, we have to set all this up and it takes all this work. It's not that hard, okay? You set up the products and services in QuickBooks. Let's say you use QuickBooks, okay? And as long as you point the things to go to the right places, they automatically go to the right places, okay? And so as long as you set it up ahead of time, that's all you have to do. And then it tells you this stuff. And then you can make an informed decision. So if this was your company, what would you do?
Probably have a conversation with my foreman.
Probably a good idea, huh? What's going on?
It would start out calm.
So is it a pricing problem? Is it a process problem?
Your level of employees is probably too low because you're not paying enough for the employees.
Maybe.
And you're paying on the back door for that training.
Maybe. Training problem, maybe. There's still more digging that needs to happen, right? But at least you know where to dig instead of digging in 5 different places. So when you're looking at hidden profit leaks Instead of saying, I have a profit problem, and not knowing where it is, you can look for things like go back labor, warranty labor, rework, missed materials. This is a huge one. One of the same client that I used kind of as this example, once we broke it down, we saw that their materials was at 9%, and we were marking materials up at 23%. I'm like, what happened? Why are we at 9% markup when we've literally been marking everything up at 23%? It was a software problem. The software wasn't capturing all the materials. We had switched to a new software that I was not involved in, by the way. Just want to make that very clear. And in that process, the software was glitching out and was not capturing the markup, and it was putting it straight through with zero markup. And no one was catching it. No one was looking at it. And we would not have noticed it had we not broken it out. Okay? Another issue we found out was that there was all this materials just laying on the ground that was never being used, which is another issue, that they were paying for and not invoicing for, okay? And so you can start to see little things that you can start to tweak and fix by having this put out. And then poor estimates too, right? When you start to look at this, is it poor estimating? Maybe that's the problem, right? But if you don't have the transparency, if you don't have the visibility in your financials, you don't know what the problem is. You're running around like a chicken with your head cut off. I got a profit problem. It means nothing, okay? It means absolutely nothing. So I've already said this before, but when you talk about financial problems, you got to increase prices, or your margin, or your revenue, or whatever it is. It might be that you need to increase your prices, but it might be a training problem, or a quality problem, or communication, or processes, or you name it. It could be so many other things, but without the visibility, you're never going to know which one it is. And by doing this simple thing that takes a little bit of work to set up and then it's set and forget it, other than looking at the reports regularly, hopefully, then you can start to dive into what you actually need to do. I want you to think just for a second, what are your income categories? Do you have services versus products? Do you have multiple different types of services that maybe you want to track? Different locations? Revenue streams? And then what are the costs associated with that? How would you break that down? How would something like this be beneficial for you? And are you doing it? It takes a little bit of work up front to set up, but once it's set up, it is so beneficial. When I work with clients after we've set this up and I meet with them, it's not a conversation about, well, what's going on or what do we need to fix. It's a conversation about how we're going to fix it. Because we already know. We already know what's going on. Any questions? Yes?
It's not a question, but it's an addition to what you've been saying.
Yeah.
Also what I've seen, I work a lot with, my dad was a GC, I work a lot with construction.
Mm-hmm.
When you have the information, the communication to the team about where the ball's getting dropped is much easier. To say on this job we did X, Y, and Z, and here's what happened. You guys worked hard for a week and we lost money.
Yeah.
Is much better than just saying this isn't working. So I like the dual benefit of like back to communication and training. It's not just finding a profit, it's also about training.
Yeah, it's huge. Well, and a lot of times you'll say, well, we were profitable on this job. Well, maybe of the 4 different income streams, you were profitable on 3 of them, and those carried the one that wasn't.
Yeah.
Right? And so maybe it looks great, but you're missing out on a lot of revenue. Right? And you don't want to miss out on that, especially as you scale. You want to fix that now. Well, you can. Yeah.
I'd like to point out, when a company's going through different stages, oftentimes the beginning stages, people think they need just really simple financial statements.
Mm-hmm.
I believe it's actually the opposite. You need it to be simple, but you need it to be very detailed. And so we brought a lot of companies, Samantha and I together, and some of them.
This is my dad, by the way, for you guys that don't know.
And part of what we find is that the broad stroke of data doesn't give them enough information to make decisions really early on.
Mm-hmm.
And so when they're building what I call their profit model, like how they're going to be a profitable company, and they're setting their prices, they don't have enough information to actually set their prices appropriately. And since most entrepreneurs, most small business owners are afraid to charge too much because someone will say no, they just end up running a company that doesn't make money. And that's not good. And so you need this kind of structure pretty early on. And I'm just going to quote one of my favorite shows from a long time ago, Profits Pints. Anybody? Profit. What's it called?
I don't know. What are you talking about?
Lotus.
Yeah, the profit.
The Profit. Yes,
Okay.
the Profit,
I was like, I don't know what you're talking
yes.
about.
Anyway, he talks about building the hamburger. And I use that with my clients that are running $100 million companies. How much does it cost them to build this hamburger? So look at your business like a hamburger. What's the cost for the bun? What's the cost for the mayonnaise? What's the cost for the ketchup? What's the cost for the lettuce, the pickles, and the meat? What's the cost to assemble it? The wrapper? And that's how you would build the profit model. Well, if you don't know all those details, like Samantha's pointed out here, you can't possibly build that hamburger. And so you'll never know what you're selling the hamburger for, whether it's profitable or not. And then those industry standards that you can find online, there's some benchmark ones that are pretty easy to do, but you can find those things online to know what your margin should be. Like on a service company, if your margin isn't at least 3 times your labor, on your labor, you are losing money. And 33% all day long on labor, you'll make money. If you get less than 50%, you're losing money. And you might as well just go get a job. I mean, and that's really what it is. And what we see with smaller companies is that they have a job that doesn't pay very well, that makes them work long hours. And it doesn't have to be that way.
Well, and that's a lot of why I'm passionate about what I do. This is from my dad, as you can tell, is that with these small tweaks, very small tweaks, you can go from having a business that runs you to running a business. And it's a big difference. It's a very big difference. And I hate when I run into a business owner that has a business that runs them.
Well, and I would just add too that, as Samantha was growing up with me, and she's probably there a block, but I was buying businesses that didn't know what they were doing, for what they were worth, but what they could have been worth if they would have had some guidance like Samantha's giving here. They could have been worth so much more. And I really discovered that even though I was feeling fortunate that I could buy these companies for the price I was buying them for, I felt really bad because it didn't have to be that way for them. And I wasn't like a predator against that. I mean, it was what they were worth. And oftentimes, a few of them, were like, this is what I want. I'm like, I'm not going to pay you that because it's worth more than that.
Because you paid more than that.
So I pay more. And they're like, what are you doing? I'm like, look, I can't sleep at night if I don't do this. And so when I started seeing these people, Samantha was involved. She became my assistant and all kinds of other stuff we did together. And it really did change the way I looked at small business. And it's such a huge percentage of our economy in the United States. There's no reason for people not to make a good living and have good benefits and still be able to do their passion. So, anyway, sorry.
You're right. Yeah.
On a little piece of that, I'm going to say
Oh,
this
sorry.
I'm a cousin, but I used to fight with Samantha and Marshall on a lot of this stuff. I thought I knew better.
I didn't pay them
I
for
knew
this,
my
okay?
industry. I knew my industry, right? It took me 2 years to really, and they really do practice what they preach on this stuff, and it really does start making sense when you dive into it. And we started with a lot of very specific categories, and now over time we've been able to simplify it.
We had 8
because we know
classes.
where our real levers are. But when you're starting out or when you're a smaller company, it's better to have as much data as possible, and then you can simplify later.
Definitely. Did you have questions? Sorry.
Yeah, but more practical when I'm thinking about this.
Yeah.
And we receive a lot of insurance payments, so that would be the way to break it up is
Yeah.
cash and then per insurance company. But the idea of going through every check and recording, it sounds
A lot,
bad.
right?
Yes.
So, no, I'm really glad you brought that up.
It's
I'm really glad you brought that up. There is a balance between how much data are you getting and how much work does it take to get the data. Okay? There is a balance, okay? You do not want to create a process that takes so much time and so much energy to get the data that is not worth the data, right? And so you kind of have to think like, okay, first of all, can you streamline that process? That would be the first question that I have, right? Is this data so important that I want to try to see if I can streamline the data or automate it somehow, because the data is important and I do really want this data, right? That's the first question. And then the second question is like, no, I can't, like if you can't streamline it, is it worth it, right? Is it worth the time? How beneficial would it be to have this data? How much information would it be? And then the other question is there maybe a different way to gather that information in maybe a rough estimate?
I mean, I do have that in a spreadsheet that we can track, what is owed to us.
Yeah.
But it's not in the accounting software. In the accounting software, we just
and that's okay.
And it just shows up.
Yeah. So again, that's where that balance is, right? So if you can streamline it and automate it so it's in the accounting software and you can see it really well and it's pretty and it's beautiful and you can like run the percentage report, that's the ideal, right? But it doesn't always work out like that, right? But don't bend over backwards to try and, hire someone independently just so that they get the data. Like, don't do that, okay? It's not worth that. I know. It can be hard. It can be hard, and I recognize that, right? So there's a balance. I'm really glad you brought that up.
Do case studies or spot checks?
Yes, spot checks are important.
About something. That's why it's important in the early days to have more data, because you can kind of really see where you need to go.
Mm-hmm.
And when you get to a point where you're a larger company, larger company, you start doing what they call quality of earnings reports, which are really extensive. I mean, it could cost you $40,000 for
but they still do them.
service to do that.
It's crazy.
The funny thing is, those quality of earning reports don't give you any more data than what this simple data gives you.
Yeah.
And so if you understand the quality of your customers, the lifetime value, all the different things you measure with the company, our metrics, with Brent's company was, it was a long page of metrics we measured for quite a long time. And of course, we were transitioning a business type.
Mm-hmm.
So we wanted to track when the transition time.
And then we switched it and we stopped because it was no longer relevant.
We hit 40% of our labor on 10% revenue, and then we finally killed that 10% of revenue.
Mm-hmm. Yeah.
And it was all cash flow play. But if we didn't have that data, we wouldn't do that. And when you're small, it's more important because the biggest thing that I see with small companies, and Samantha's seen this, she saw me do it. Was I'm working like night and day, and I could get a job and make more money, for that time in the early days of the business, and it just isn't worth it.
Yeah.
And so start off your business. If you're starting up a business or you're early in your business cycle, 1 or 2 employees, or you're set up or whatever, just make sure that you're including your compensation in this formula. Because if you don't, and you get to 10 employees, and you haven't included your compensation, now you have a non-profitable company.
Yeah.
Because you haven't accounted for your income.
Go ahead, Kelly.
So, am I understanding that the way to track this information would be like in my accounting software's chart of account?
If you can, yes, that's the ideal situation because then it's all together, right? One thing, so I did this for a little while when I first started, is even though I wasn't paying myself, I still put it in as a cost, and then I owed myself is what I did for a little while, and then my CPA did something. I don't know what he did. He did something in the back. George probably knows what he did. He did something. I don't know what he did. And so, but then I could see what it would look like, right? And so now, if you can't do it in the accounting software, at least do it on a spreadsheet or something, right? So that you have an idea. And for you, it might even be like a per project thing, right? It might make sense per project for you to be like, this is how much time I spent on this project. This is how much I got on this project. What is my gross profit on this project, right? That might make more sense for you, at least for now.
As soon as you can stop trading your time for money
Yeah.
and tracking progress and make it.
Yeah.
One thing is you can do it in your QuickBooks or whatever. Just set it up, name it so it's obvious that it's an estimate.
Yes.
Owner estimate pay.
Mm-hmm.
Because it's not a true expense in the way of tax purposes or if the bank's want financials or anything.
Mm-hmm.
You can't make up what you're paying yourself.
Yeah, which I think is what my
So
CPA
if
did.
you put owner estimate pay or something, whoever's looking at that will know that's not part of the actual COGS. It'll allow you to track it.
Mm-hmm.
That makes sense. So it's name the account in a way that anyone who sees it can tell it's not an actual expense, it's something the owner wants to track.
Mm-hmm. Okay.
Yep.
Anything else? And I will be here afterwards, so if you have any specific questions or anything, want to talk about your situation, I'm happy to answer them. So I'm going to move on. Oh, I did have another one. I thought I was done. Sorry, guys. So I already talked about this, but what could you track? Services, products, departments, locations, labor types, warranty work, and rework. That's the other one. Is there a way for you to track that? I already talked about this. Okay, now we're going to do the giveaway. All right. So bear with us. This is the first time we're doing this. But we were wasting paper because we were printing out your like sign-in sheets every time. I'm like, Sky, there's got to be a way for us to do this like virtually, right? So we're trying this for the first time. So first of all, did we get everyone registered?
Yes.
Okay.
It should be in there. We should be good to go. Also,
Awesome.
something I just thought of.
Yes.
Is this ties into, I think it was last month's Profits Pints
Uh-huh.
on
What?
like the processes.
Oh, yeah, you're right.
It ties into this
See,
one.
this is why Sky's going to come up and present now. No, I'm just kidding. So last month, we talked about improving your processes, and we improved one of our processes, guys. So we wanted to streamline. I'm going to use this. This is perfect. Last month, we talked about improving your processes, and one of our processes was Profits Pints. It is a really robust process, okay, because I am working on this month, I'm finishing up last month, and I'm working on next month all at once, all the time, okay? And so we made it this long tracker thing. It's like perfect now. I love it. But one of the things that we also realized was that we were having everyone manually register on a piece of paper, and then Sky was taking it back and then manually putting it into our HubSpot, right? We're like, that's silly. That's silly, guys. So now we have a QR code that you can put your stuff in, and we're gonna do a winner right here up on the screen, okay? So we're gonna test it and see if it works. So if it doesn't work, it's Sky's fault. I'm just kidding. I'm just kidding. We did test it like 5 times, so hopefully it works. All right, so the giveaway for today is a seat in our Purpose to Priorities workshop. So the Purpose to Priorities workshop is a 4-hour group workshop. And during this workshop, we're really focusing on getting you a 90-day strategic plan for your business, okay? So we go over accountability charts, Power of One cash flow stuff. There's peer learning. It's a really impactful workshop for business owners, and it's limited to 5 to 7 business owners. And we already have 4 people signed up. A couple of them are in the room. And so once we have this, and I have a couple more people interested in signing up, we should probably be launching it in July, okay? So look at that. Look at all those names up there. Okay, we're gonna see if this works. All right, you ready? Drum roll. Let's do a drum roll, huh? Ready? Nathan! Where's Nathan? There you go, Nathan. So you're the winner. So we'll reach out and we'll talk to you, okay? So we're all set. So thank you guys for doing that. Now let's see. I was excited. Sky found that. That was all her, not me at all. She figured it out. Okay, so now next month, we will be back here on the 28th of July, same time, same place, and we're going to talk about the decision filter. So this is how successful business owners know what to say yes to, and more importantly, what to say no to. And fun fact, this is the week before my wedding. So I will be here with you guys, and then I will be leaving to go finish planning my wedding.
How to say no?
And I'm going to teach you how to say no. That's right. Yeah, that's what I'm going to do.
Do as you say, not as you do.
Do as I say, not as I do. That's right. And so anyways, that's all I have for you guys. If you have any questions, I'm here. Please eat the food and have some drinks and hang out. Thanks for coming, guys. Thank you.